Hello, and thank you for joining me today. My name is Bart McCleskey. I'm the president of Rapid Gun Systems, and today's video presentation is about how to handle the California Firearm Excise Tax. We all know that we must start collecting the California Excise Tax, Firearm Excise Tax on July 1st of 2024. We all despise it, there's no doubt about that, and we know that the court is likely to challenge it. One of the good things is that if the court does challenge it and there is an injunction put on the tax, we have made things so that it's going to be very easy to turn it off. And so rest assured that turning it off is going to be easy. Nonetheless, even though we despise it, we need to get ready for it. We need to do that because we can't afford to mess up an 11% tax. An important point for you to know is that it might be a little more complicated than you think. The nice thing is Counterpoint handles it beautifully. But let's talk about briefly about some of the complications. There's some items where you charge FET and sales tax, and other items where you only charge FET, and other items where you only charge sales tax. There are some customers that can be exempt from FET. And then of course, if we ship out of state, then we don't need to collect sales tax, nor do we need to collect FET. And so all those different combinations and permutations is what makes this a little bit complicated. Here are some things that I recommend that management do this week. First and foremost is watch this video. Congratulations, you're getting the first one done already. Perhaps you want to watch it more than once. Critically important is to test every scenario in your practice company. Verify that the sales tax and FET are calculated correctly. We provided a list of scenarios for you to test. If you don't have that in your hands, email Nell and she will get it to you. And very important is to consult your tax advisors if you have any questions. Lastly, are some things that we think you should do next week, the week right before this goes live. And that is to make a list of transactions that you want your staff to practice. Allow your staff to watch this video and then have each staff member demonstrate that he or she can successfully handle the tough stuff. You don't want to be fumbling around in front of customers on July 1st. The only way to guarantee you're not fumbling is if you practice it. Now I have an obligatory notice that I have to put up, and that is that this video is not intended to be tax or legal advice. It is merely our suggestion on how you use this system to calculate, and it's based on our best understanding of this new tax. We might be wrong. Please consult your accountants, your attorneys, and tax specialists. And lastly, it is very important for you to test in your practice company and then review live transactions carefully that first week of July. Rapid is going to aid you in setting all this up, but we can't guarantee that we did everything perfectly. You are the one who's accountable, and so please, please test, test, test. So with that said, let's get into some of the basics about handling FET. The very most basic level is both FET and sales tax must be collected on firearms, firearm precursor parts, and ammo. Secondly, the fee that you charge to handle FFL transfers is subject to FET, but it is not subject to sales tax. Third key point, you must collect FET based upon the firearm's fair market value on FFL transfers if the original sales receipt from the shipping FFL does not show that they collected FET. That one's really important. Fourth, trade-ins reduce sales tax. The consideration paid on a trade-in will reduce the sales tax on the new firearm that someone's purchasing. We do not believe it works that way with FET, so the trade-in value will not reduce the FET that's owed. Fifth key point, an active or retired peace officer must pay sales tax, but they are exempt from FET. And so we have to have a method to make a customer exempt. And the last basics that I'll point out is that the FET should be collected on dross and safety fees, but sales tax should not be assessed. Now again, these are just the basics. There are other scenarios. So with having said that and looked at those, let's get into a demonstration. We know the basics. Let's jump into Counterpoint so that you can see how it's done.
Let's begin our counterpoint demonstration by looking at what changes with your item setup. So we're going to go to Inventory and Items. And my first item here is a Smith & Wesson. And notice this tax category field. You've never used that before, and you're going to start using it now. And you can see for this particular item that it has both FET and tax is what the tax category is set to. You'll also see this taxable field. You have been using this previously. It will be defaulted to checked, and you won't be able to uncheck it. And that's because the tax category now controls tax. So essentially you can ignore the taxable field going forward and only pay attention to the tax category. FET and tax should be attached, of course, to firearms, precursor, and ammunition. Non-taxable would be many of your service items that you have today. So you make them non-taxable. Instead of unchecking that flag back here, you just set that it's non-taxable in the tax category. Just a handful of items are only FET, and then of course things like holsters and other non-firearms that you sell, they'll all be set to taxable, meaning that it's only going to charge sales tax. So again, be sure that whoever sets up your items is familiar with the taxation rules, because selecting this tax category is a little bit more complicated than the old method where all we had to decide was whether it was taxable or not. There are now 4 choices, and choose the appropriate one. Now we've jumped into our touchscreen, and let's look at FET in action. The first thing that I want to point out is this section down in the document totals section. You'll see that you'll now be able to see the California FET as well as the local tax that was collected. So let's say this is a walk-in customer, and we're selling this walk-in customer some ammo. The price was $75.99. Since ammo is subject to California FET, we can see the 11% tax was added, and then we can also see that the sales tax is added, and both of those, of course, then add into the total. Take a note of this. This is $8.36, $6.08. Now I'm going to add a holster. You can see this California FET stayed the same, but the local tax went up because a holster is subject to sales tax, but not subject to FET. Now I want to demonstrate selling a firearm, or at least putting a firearm on layaway. So we're going to go to our layaway buttons, and we're going to start a new layaway. The first thing that we do is put our customer onto the ticket. Next is click the Set to Layaway line. We do want to add our dross fee, and notice that when it comes in, that we have the California FET, but there's no local tax. Now we pick our firearm that we want to sell. That firearm is subject to both FET and local tax, so you'll see that both of those have increased, and now we're ready to pay. Now, what if we learned that John Johnson is a peace officer, therefore he should be subject to local tax, but he should not be subject to California FET? Well, in that case, you go to your More buttons, to Tax Functions, and Tax Code. We're going to override the tax code on this ticket. Local tax is the default. That's the one that says, hey, everything is subject to both FET and local tax. We're going to change it to say that John Smith is exempt from FET. And now that we've changed the tax code on the ticket, you can see that we have a local tax being charged, but there is no California FET being charged. Let's take a moment to review the receipt, because we have updated the receipt in order to accommodate California FET. In this example, you can see that I sold some ammo for $75.99, and this FT underneath it means that it was subject to both California FET as well as local sales tax. I also sold a holster for $99.99, and here you see there's only a T, meaning that this particular item was subject only to tax. And then the next thing that I sold was a pistol cleaning, and there's nothing here, meaning it was not subject to FET, nor was it subject to tax. If you had an item that was only subject to FET, then you would simply see an F. So that is your indication to quickly be able to determine, did we charge the appropriate, is the item set up correctly? Are we charging the appropriate taxes? Now down below, you are able to see the sales tax total was $14.08 and the FET total was $8.30. We got a little error here. We didn't have the zero out, and so we'll get that fixed up. And then of course your ticket total. So watch your tickets as you're ringing them up, particularly in that in your first week, to be sure that your items are all configured correctly so that you're charging the correct tax. We made a very similar update to the invoice. Here you see is that same ammunition that we sold, and the FET indicator is to the right. And so this item was subject to both California FET and sales tax. The holster only has a T next to it, so that was charged only local sales tax. And then the pistol cleaning has nothing after it, therefore there was nothing charged. And when you look at the bottom, you're able to see the FET, the sales tax, and the total. Let's talk a little bit now about FFL transfer pickups. Those are now a little bit tricky because what you do depends upon what the sending FFL did. If the sending FFL charged sales tax, California sales tax, but did not charge California FET, then you need to assess FET on the value of the firearm being picked up. If the sending FFL charged neither California sales tax nor FET, in that case, you would want to collect both of those from the customer on the fair market value for the firearm. So let's take a look at how we do that. So I'm going to go to our FFL transfer button, and I'm going to start an FFL transfer pickup. Typically, we'd enter the customer and pull the firearm onto the ticket. I'm going to skip those pieces and come down to this section here where we're going to add our transfer fee. So let's say our transfer fee is $20. You can see that it was added onto the ticket and that there is a California FET that item is subject to, so that was put onto the ticket. You then determine your fair market value. And you can see we've got several buttons. If you need to charge both FET and tax, then you click this button. If you need to assess FET only, you click this button. And if the sending FFL collected both California sales tax and FET, then you click this button to add none. So let's say that this particular FFL did not collect any tax or excise tax. In that case, we click this button. And let's say the value of this firearm is $500. We can see that we've got the fair market value on there, the fair market reversal, and as a result, we charge both California FET as well as local tax. And of course, these other buttons would do things slightly different. So you have to be very careful with your FFL pickups now to make sure that you have the original receipt so that you know the proper tax to assess when you are processing the pickup. And I have one last thing that I want you to be aware of, and that's the fact that on the customer screen, there's now a tax code. And so if you have a customer who you know is FET exempt, you can put that on their customer record, and that will automatically override the tax code on the ticket anytime that particular customer is put on a ticket. It's not necessary to do it there. You can always just do the override on the ticket, as I showed you earlier in the presentation. But this is a little shortcut if you regularly have customers who are always making purchases who are FET exempt. All right, that concludes everything that we wanted to cover. Please give Nell or me a call if you have any questions, and good luck. Bye.